we judge this, that this is no longer a contested election.
Some clarity around the election and some clarity with a divided government, which I think is actually a great outcome for markets.
The virus and economic growth is more important than the gyrations in D.C.
I think the vaccine, in a way, should be seen as a global fiscal stimulus.
Everything is going to be lower and flatter for longer.
There's just a lot of cash in the sidelines that needs to be put to work.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York and London, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene, I'm Jonathan Ferro. Lisa Abramowitz did the unthinkable. She took the day off, Tom Keene. Lisa Abramowitz took the day off.
On radio and television, it's hard to believe. I think the gloom yesterday was so thick with Lisa. She's like taking a day off therapy and all that. She's, trying to.
Is it because of the stock market rally in the last couple of days?
Could have been the rally.
Needed a little bit of rest
look
after
at
that.
The Goldman note, John. Look at the Goldman Sachs note. Go over that.
Roaring 20s from Goldman Sachs. JP Morgan talking about market nirvana. I want to check in on the price action. Let's just look at where futures are right now, and then we can talk about price targets. S&P 500 futures this morning, kind of chopping around on the S&P. We are positive 0.7% and up another 26 points. So here we are at 35.67, and Goldman coming out, Tom, for 2020, looking for 3,700 year-end, 3,600 previously. But let's go with their year-end 2021. 4,300, 16% upside through 21, in addition to the upside they see into year end.
Yeah, they model out to 2022 as well. And again, John, it's everybody recalibrating and readjusting, hearing, yes, it's the vaccine. And I know Mr. Costin leads with that. He likes deep value. He likes ESG. So in right now, but it's got to be more than just the medical news that we're seeing. And John, to be honest, in the last 12 hours, the pandemic news is really pretty grim across this nation.
Well, Tom, let's do this. I'll read the line from David Costin at the top of the piece this morning. A vaccine is a more important development for the economy and markets than the prospective policies of a Biden presidency. This is a story for the market right now. We've talked about it repeatedly over the last couple of days. This market is living in the back end of 21. We're living in the here and now, looking at a deterioration, quite clearly, in COVID cases in the United States of America, Tom. On top of that, a contested election down in Washington, D.C. that has not been resolved yet, and a Senate race that has not been resolved yet. You need to get through the next couple of months still.
Well, even the next couple of weeks as well. Of course, overnight, John, and we don't need to go into it right now. We can focus on the markets. Futures up 25. The VIX is solid, 24.09. We should note that the bond market closed today, folks, for Veterans Day, Remembrance Day in the United Kingdom. But, John, what I would focus on more than anything here is just the recalibration and reset. Let's remember it's November. And, John, you've got to reset into your 2021 research note.
We've got to reset into the politics as well, with the president refusing to concede the election. Secretary Pompeo in the last 24 hours really stirring things up.
It will be a smooth transition to a second Trump administration. All right, we're ready. The world is watching what's taking place here. We're going to count all the votes. When the process is complete, there'll be electors selected. There's a process. The Constitution lays it out pretty clearly.
Secretary Pompeo there, that's the fuller quote from Pompeo, and I think it's really important to use the fuller quote. A lot of news organizations overnight running the first line, a misplaced joke, bad taste. Maybe so, but I think it's important to recognize the overall context of that comment and what came afterwards as well. For the President-elect Joe Biden, this is what he has to say.
I just think it's an embarrassment, quite frankly. The only thing that... how can I say this tactfully? I think it will not help the president's legacy.
That was President-elect Joe Biden. Joining us now is Peter Cheer from Academy Securities. Peter, it's a remarkable situation. Tom and I talking about these market notes coming from Goldman, roaring 20s, coming from JP Morgan, market nirvana. And here we are confronting two serious issues. One, a contested election down in Washington, D.C., which people are shrugging off. And two, COVID is still a thing in America. It's becoming a bigger thing again, Pete.
Yeah, it's definitely deteriorating. And I can see the point. We started writing about a month and a half ago that we could see the economy doing much better by the end of 2021 than it even started at 2020. But I think there's a lot to get through first. We really need to know we're going to get stimulus, and not just Band-Aid stimulus, but real infrastructure spending. And yes, we had some really positive news on the vaccine. I think it's going to take a little while. So right now I'm a little bit bearish in the near term because I think there's too many hurdles for the market to cross, and everyone got a little bit too bullish in the past week.
Peter Chair, is the market pricing in a Biden presidency? I mean, the way I look at it is the market is looking at, as John says, well out into 2021, and they're not looking, I would suggest, to a Trump 2021.
Well, I think we still have to accept that at this point it looks like it's going to be Biden, that he's going to get through, that we still have the Senate race that's going to come up, and those runoffs are important. And I just don't see how we get meaningful stimulus before then. And there's so many uncertainties. Although I firmly believe we will get that infrastructure spending, there's a lot to go on before then. So, again, markets, I think, are a little bit complacent right now, a little bit looking too far ahead, and maybe we've got to focus on the here and now a little bit more, where there are contested elections, there are issues, and the vaccine, unfortunately, is not here yet.
With the gyrations you've seen the last week, have you recalibrated your sector choices here? Mr. Costin and Goldman clearly has done that. Maybe he's making some institutionally easy calls like the OSO and ESG and all that, but parse it out, financials, cyclicals, and the rest. What are you looking at as being still movable into next year?
So we have really liked what we've been calling the have-not. So those sectors that were left behind, whether it's small caps, whether it's value, whether it's financials, I think those are going to come, and do very well. And I think big tech is going to be challenged a little bit, in part because I think this kind of scenario of work from home forever is going to dissipate, and you've got some valuation issues there. And then even, I like the financials a lot. And I think one thing that's been missed through this whole talk is a lot of people talk about the shape of the yield curve. Yes, that's good for financials. But you're still having a robust housing sector, which tends to be good for financials. And financials took a lot of loan loss reserves. I think if we're near the end of the pandemic, our ability to deal with it, you won't see those loan loss reserves increase anymore, and you may actually see some release. So I think financials can do very well. They're very underweight. So those are sectors that I've been looking to, and I expect this have-not outperformance to continue.
Pete, let's talk about the Treasury market. You mentioned it briefly there. 10-year yields, of course, at that upper end of the range of the last 5-6 months. Bond market closed today, but here we are at about 97 basis points on a 10-year yield. How much oxygen is there above this level, Pete?
I think there's a decent amount. I think we get towards 125 on the 10-year. I think as we break through 1%, you'll see some more selling pressure. You'll see kind of people pile into the trade. I think that inflation hopes remain, especially if infrastructure talk comes up. And positioning is just, again, fairly awful. Everyone got so bullish again on the rate side of things. I think we head towards 125. I don't think we get much above that because the Fed will jawbone it down.
Well, Peter, that's what I wanted to build on as well. Not just the jawbone from the Fed, but how the market would respond to that too. Last couple of days, clearly an index sector story for the equity market. At some point, you have to believe, with a move up in 10-year Treasury yields, it starts to take a bite out of broader risk appetite. Do you think 125 is where we get it done?
I think we've already started seeing that, and I think as we move towards 110, you'll see continued pressure, especially on some of the names that have really relied on this belief that the Fed is here forever, that rates are going to remain permanently low. I think the markets as a whole can adapt to it. I don't think we see a massive sell-off, but it will weigh on the markets.
Peter, Lisa emails in from 15 Central Park West, and she's asking about the gloom that's out there right now. What is the level of gloom, and is that a wall of worry that will really help us make a David Costin-like move?
I don't think so at all, actually. I think the doom kind of completely dissipated with the election, and my streams that I follow became incredibly bullish. Everyone was bullish. So that's part of why I think we're seeing this rotation. We're seeing some of these sectors fall down is everyone got too bullish post-election, and now the reality sits in. And, let's think about it. Everyone's kind of talking about how great this is for D.C. and all these things. D.C. often struggles to function at the best of times. It doesn't feel like the best of times in D.C. right now.
Just for the record, for our listeners, our audience worldwide, Lisa does not live at 15 Central Park West, just in case anyone is going to go and try and find Lisa Abramowitz. Just leave her alone today, Tom. Peter, just to wrap this up, this equity market, you like the have-nots in this stock market, right?
Yes.
But you also say you're nervous about the next couple of months. I understand that. I understand why. Where do you go for the protection, the downside protection? Where'd you get it from?
So I think right now you're supposed to be selling the winners. You're supposed to maybe be 50% invested. So you want to play this cautiously. I think you're looking for a dip. I think you're looking for that where the market kind of gets disappointed and everything sells off, and we don't get the rally like we've had the past couple days where you really had strength in the Dow, Russell 2000, and weakness in big tech. I think you get a period of time where everything moves down, and that's when you want to reinvest heavily, but really focus on loading up on those have-not stocks.
Peter, great to catch up, as
Peter,
always.
thank you.
Peter Cheer there of Academy Securities. Peter, we appreciate your time. And Peter, just finally, before we let you go, I know that at your firm, a huge amount of veterans are working for you over at Academy. Peter, can you just speak to that on a day like today, please?
Yeah, so it's been a real pleasure working with Academy Securities. We're about 80 people. We're service-disabled, veteran-owned. Our entire management structure is veterans. About 45% of the firm are veterans. And I also have the pleasure that we work with what we call the Geopolitical Intelligence Group, which is 14 retired generals and admirals. So they provide a lot of geopolitical context that sometimes in its own right is very worthwhile, and sometimes it really meshes into what we're doing on the macro. It's been incredibly helpful when we've been dealing with China and our calls on China. So it's been a pleasure with working with these people. Everyone's been great. The service they provide to this country is awesome, and I'm happy to be a part of it.
Peter, fantastic work. Fantastic work over at Academy. Appreciate your time. Really, really cool. Tom Keene, I think we both just got the same message, didn't we?
We did. Jim Bianco very clear that in his research there is no gloom at 15 Central Park West. For those of you, we say this with great affection for the architecture down at the bottom end of Central Park here in New York. There have been what many would suggest monstrosities built high and straight up into the air on Billionaires Row, 15 Central Park West, which is a really fancy address. I think, John, they have a helicopter pad actually, is within the scale of the grandeur of middle 20th century New York City. It's actually a very beautiful building and sits nicely there in the southwest corner. Did I do okay there, John?
I think it's fair to say you would know more about this building than any of us would, Tom.
I just
Especially
thought,
not Lisa.
I think Lisa's scoping it out. I mean, I don't know what else.
Is she?
You know what she is? I just
today?
got a message from her. She's up picking out her turkey in the Catskills.
Okay. Or maybe after all these years, she was never bearish. She was limit long airlines, leveraged up over the last several months.
I'm looking for an entry
cashed out,
point.
and maybe she's not coming back. We'll find out tomorrow. From London and New York this morning, good morning for our audience worldwide. This is Bloomberg.